Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, November 1st, and it was a down day in the markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn closing below 350, off 6 cents a bushel. Beans taking it on the chin with front month January now off 20, and wheat in Chicago managing only a 2-cent loss. News today was pretty light. There was no real impetus for the sell-off other than we continue to see good reports of soybean yields coming off the combines as we get to the later end of the harvest, and we've got USDA's crop report coming in another week, so traders are starting to think it's going to be a big crop. As far as export news, there was no soybean sales announced this morning by USDA, which may have helped stimulate selling pressure, but in corn we did get a 200,000 metric ton deal to Mexico, but that too did little to stem the tide of selling today. Overall, all the markets were sort of in a risk-off attitude. There are several things driving the bus here. First of all, crude oil has taken it on the chin the last few days as a result of what looks to be an unraveling of the OPEC potential for an output cut. They're not yet into the meetings, but early discussions suggest that they're not going to be able to meet any sort of resolution to cut output, so traders are starting to lose hope for that. The only sort of positive stimuli in the oil sector today was news out of Alabama, where there was a pipeline explosion that is cutting gasoline supplies in the southeast, so that got the gasoline market going higher. Crude oil followed for a little bit, but actually shook it off by the end and closed lower. Other things that are affecting the market, we've got the Fed meeting this week, although we don't expect any sort of interest rate change, but at least some policy discussion or guidance for the December meeting, when many people are looking for a potential interest rate hike. On top of that, 1 week from today is the presidential election, and with the changing race conditions and the tightening of the race, equity markets and markets in general are sort of worried about the outcome of that race. Turning back to agriculture, after the market closed, USDA did give us a positive soybean crush number. Looking at September crush, traders had expected 137.6 million bushels for September. Instead, it was higher at 138.3, so maybe that will stem some of the tide from selling today. In terms of exports, we know the export program has been strong, and let's take a look at really what one of the key drivers in that export situation is the changing currency values and the changing economic conditions between last year at this time and this year. And in particular, we see the Brazilian economy has changed direction as a result of getting rid of their former president, and their currency has strengthened quite precipitously over that time period. So when we look at our beans versus Brazilian beans, last year we were both on par in terms of export prices, trading around the same value. But today our beans are about $9 to $10 a metric ton cheaper as a result of the strength in the Brazilian currency. On top of that, we also have a good situation compared to Argentina, our major export competitor in corn. Again, last year, even worse, Argentina was at a much discounted position relative to us versus where we're at today, where we are actually at a discount to Argentina. So our export program, not only in beans but also in corn, should be very favorable because of our competitive position in the world market. This is something that stymied us last year. We saw our export numbers, especially in corn, were very disappointing last year. In turn, I think this year will be a much different animal, and we've seen that to start the year. And so far, with the conditions the way they are, we should continue to see strong exports moving forward. Now, taking a look at the long-term corn chart here, let's take a look at where we're at, and breaking below 350 has sort of been a pivotal point. We have only traded below 350 a few times, or not even for an extended period of time on the weekly chart here. So going below 350, I don't think personally is very sustainable. I think with the strong export program, yields at the tail end of the season are starting to be not as high as they were at the first part of the season. We're hearing reports from Nebraska and Iowa where yields are either at where they were last year, or in some cases even worse than they were last year. Some of these late season corn is not faring as well. So overall, I I think, the bottom may be in for corn. We may be building a base from here. We're seeing strong exports, and as long as we continue to see strong exports, I think that this market has the potential to grind higher, not shoot higher, but certainly grind higher as we get past harvest and into the storage season. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, visit us online at grainhedge.com and take a demo of our trading platform. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.